Starting with Johnson & Johnson, which we talk about when we talk about pharma, and that's because it's kind of like the Leviathan that owns consumer stuff like hair care products, as well as pharma, and a fantastic portfolio it is, and then this medical devices and consumer kind of electronics type of area of business, which is partly something that they acquired over time with big buyouts like Synthesis. Market cap $360 billion. We actually own these in our portfolio as well. And that's
congratulations, you've done very well. Yeah.
Jumped in and wanted that sort of.
So you're really hot on this one then, hey?
Yeah, exactly. We don't have to talk anymore. The PE 22.6, which is about average for a US company. Dividend yield is good at 2.5%, and it's had a steady record of paying like rising dividends for longer.
50 years.
Yeah, it's got a better credit rating than the US government.
Correct. It hasn't not declared a dividend for 50 years. That's amazing.
Yeah, that's amazing. So tell us, broadly speaking, how good are they in this space? Would you buy them for the medical device piece?
I would buy them for the diversity. That is what interests me. So I wouldn't say they're not particularly brilliant at the medical device space. They really are the leaders in that section. It's about 35% of the revenue of the business comes from that. So we also like it for that diversity. We like the drugs that they are producing. We also like the consumer goods. Anything from Band-Aid to Listerine. But then again, you've got these amazing surgical devices, and they're very broad. They don't just concentrate on one specific area. So they will have your knee replacements, hip replacements, but they'll also have your screws and bolts for trauma,
and
then they'll have your scopes,
Cordis, which they bought, which does stents and valves.
Correct. So
like aortic valves, stents to make your arteries open up.
Correct. So what these companies do is they earn so much free cash flow that they pay that out in dividends. They buy back shares, but they also buy into other businesses, and it helps them a lot with their R&D costs. They rather let a company produce the stent, and before it gets to mass market, they quickly buy it out, incorporate that in, and that's how they also grow.
Because with that credit rating, you can only imagine how much money they could raise.
So there's a lot of acquisition growth in these businesses as well, and that's a general trend.
Okay, so it's bought for its diversity. This is another useful piece of the business. So I think we're going to call it there. I mean, I've always said to people that if you want to be in healthcare, and you do, then
you only want to pick
Johnson, and that's if you only got enough money to buy like 6 or 7 stocks.
Absolutely, agree with you.
Then this is a good place to start.
It's a great place to start if you've got it on your portfolio.
There. Oh yes, we get to look at the stock charts for each of these, and yes, I mean sort of trolling along, heading into the 130s now. I remember when it was sort of going sideways for a while at around $100. And
you've taken a bit of pain. I mean, from 2014 to 2016, it's 2 years. People get very impatient. But if you've got a good quality business and you're a long-term investor, be patient. I mean, if you look at the graph over a period of 4 or 5 years, you've done tremendously well. So there will be periods, and that's normal. I mean, a lot of these companies have huge risks. They might have a patent infringement, or they might have a court case because the hip replacement that you put in your granny didn't work out, and you take them to court. These things happen, or a drug doesn't work out. It doesn't get FDA approved, or it goes out of its patent, and there's a generic that comes onto the market. So there are those risks. But I think overall, if we look at where the world's moving to,
and this company has had all of those things happen to them. I mean, I don't want to go into it now because we run out of time, but the fact of the matter is the share chart still looks like that after all of those things because it's so big.
Yeah, so it comes with the territory. That's the point. There will be periods of sideways movement, but I think it's a great one. I'm hot on that one. Yeah, definitely.
Okay, good, excellent. So am I. Right. And one more thing to say about Johnson & Johnson is that the CEO, Alex Gorski, was one of the first people to say, you know what, Trump, screw you, I'm off of your presidential council.
No, he started it all, and now everybody, I think that whole council's been dissolved now.
Excellent, well done.
Good for him, yeah.
Clap, clap.